The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and in fact, we have on this 12th day of July, the Dow Jones Industrial Average has just made an all-time high. Yesterday, the S&P did it. Today, the Dow did it. Very nice. Congratulations, Dow. Went to 18,353, just a point and a half over the previous high back in May of 2015. Great. Now let's look at the E-mini. Just for those of you doing short-term trading, the E-mini went to a peak D in the Chapman wave at 21.45.25. Don't have time. Maybe Friday I'll talk about this peak C1, C2. Meantime, back at the ranch, because it's gone to that high and because it pulled back immediately and it's now trying to recover, it says, I have an image in my mind. It's very difficult to put it into words. The momentum of, for any of you have, I don't know what I could put it into. Ice hockey, maybe? No, I didn't play ice hockey. Let's just talk about something. If you've ever ridden on a bike or a motorbike and you've turned the corner and there's a lot of sand and you've gone for a little bit of a slide, the momentum, even if you hit certain things along the way, as long as it's not a tree or the sidewalk, stops you, but the momentum just keeps you pushing you forward. I don't know why I've got that image in my mind, but maybe because it happened a number of times. The momentum of the Dow getting to the to the all-time high, above 18,351, allows residual waves. I always think of the best visual image I have is having watched ocean waves as a youth. Used to spend a lot of time at the beaches. I used to love watching the waves. And or if you swim, if you surf, you know that there's a certain way that if you take, it looks good and all that, but it just doesn't have the momentum. There's another kind of way that if you get it just exactly right, you've got the momentum. So now you've got the Dow that's built this momentum from the most important low that was made just recently. We've gone up 1,000 points. And because it's trying to hit that level, it means that unless there's something really negative, you aren't going to touch that level, and it's like a hot iron or something where you're going to just reverse immediately, very sharply, and negate all the momentum to the upside. There's this residual force. So as long as the Dow keeps trying to go higher, now let me go to the Dow chart first. I'm going to look at this and say the resistance now. 21.45.25 is the all-time high now in the E-mini. And in the E-mini, what we're looking at is as it bumps around here, if it uses up too much time, it's basically using up energy. That energy dissipates. And if at some point, instead of breaking above 21.45, I'm going to sneeze. What's going on with these sneezes? I'll just press the nose like this. That'll stop it. And then when you get to, if you smash through the, excuse me, I never sneeze. 2 days in a row, sneeze right during the show. Not supposed to do that. That's not professional. All right. So we've got 21.45.25 is the high. It isn't good to just take it out. It should take it out and get to the 21.47, 21.48 level and then go straight to the 21.45. That'll be powerful force continuing to the upside. If in fact over the next hour and a half we've gone nowhere, but we haven't been able to break the 244, right there, 243.75 level, but in fact we keep pulling back and you start to make lower lows and then lower lows and lower highs, that means on this 10-minute chart you come all the way back to the 2037, 21.35 level. All right, enough with that. Now let's get to the nitty-gritties because this is such an important session. Dow, INDU, we've got it going right here at INDU. The Dow is up 92 at this point at 18,319. Made a high today of 18,353.76. So for my subscribers, because we've only been long, at this particular point, and we only have long positions, and they've done really well. We've actually missed a couple of just missed some that would have done even better if we had them as a bunch. But we can't complain. We've got a number of long positions that have done very, very nicely in the double-digit % gains in a short period of time. But when you're looking at this, your wish is that, oh man, this is great. Let's just keep doing this for another week. But it doesn't work like that in real life. So we've got to be realistic here. And what I'd say to subscribers, if the Dow goes even 1 cent above 18,351, I actually said to 18,352, there's a certain something we're going to do. Just a kind of a protection, just something that we needed to do with a very tight stop, and that's it. So that's what we've done. But in the meantime, back at the ranch, if you're looking at the monthly chart, this is new leg C. And I've now gone to a buy mode. That means I can legitimately say that the up arrow I put in yesterday at that low that was made back on the 20th of August, at what was it, 15,370? That has an up arrow. And this is a buy mode with a leg C, which says there should be a D to come. As Jan the Dan says, coda to commence. And this is, in fact, the coda phase. Now, coda phase can last anywhere from months, 3 months, to even a year. Why? Because if I'm correct that this is a... No, I don't even want to talk about it. Let's just move on. God. It's just too depressing. So let me go on. SPX.X. The S&P right now is trading at, is also, of course, at a new all-time high, which it made yesterday, and it's extending that leg B in the daily. Remember, the Dow is in daily leg B. The S&P is in leg B. The monthly chart is in leg B, only B in the S&P. So let's just say July is down and makes peak B. August is up and it makes leg C. September is down and makes peak C. And where am I? August, September. And October is up and it makes leg D. You can't get until November in the S&P a peak D top to consider that maybe this is the end of the line, at least for you know, a really good pullback. So let's just treat it that this is the beginning. No, it's not the beginning of the end. It is the beginning of the coda phase. And the coda phase says this is where the public should start to come in. This is where you should start to see brokerage houses start to enjoy the benefits of the public coming in, et cetera, et cetera, et cetera. We'll go through that. There's plenty of time. I'm absolutely in no rush to even discuss the coda phase. But what I am going to discuss is that the S&P right now has the MACD, the moving average divergence, not yet crossing positive. And the stochastic is at 86, and that's good, 86%. Now look at the weekly chart. The weekly chart, stochastic's only at 74%. And it looks kind of okay, but it's not great. It looks okay. MACD looks very strong. I have a Chapman wave squash in the MACD and stochastic of the daily chart of the S&P. So let's just run these numbers down. The Dow's up 93, the S&P is up 12, the composite index is up 33, the VIX index is down at 1351. You've got gold. Gold was down 13, I think it was, down 11, and I'll be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I just got overwhelmed with emails and questions, and they are all very good. Let's just deal with them one at a time. So, the first question is oil. So let me do this. Oil, CL, continuous contract. Nice move up today. I'm thinking that, you remember what I said? I wasn't that sure that I wanted to be shorting oil because, yes, there would be a down move based on the PD in the weekly chart, but I think that oil is going to try to find a base. And I suspect that the move that we just had that was tested successfully today to the 44.42 level yesterday and 44.55.51 today, that's a leg A. I need to see if this trend line comes in correctly. Yes, it does. And there's we could be bouncing here a little bit. And we're bouncing in accordance with the correlation that we see. Remember, look at this. This is right here is the SPY, 5-minute SPY. A big bounce and a V-shaped pattern trying to get back to the high, hasn't yet succeeded. A V-shaped pattern in crude oil. Crude oil popped up, gapped up at the open, pulled back about 2/3, and then it's bounced, but it hasn't made a new recovery high. So as I see it right now, I'm looking, oopsie daisy. That's what we want. I'm looking at this and I'm suggesting that crude oil, I don't think it's yet time for crude oil really to start to go right down to the 30s. I think it's going to, this could be a nice bounce. And it's leg B in the weekly chart. This is no good. This is out, that circle. You've got a V-shaped pattern. I would be very concerned if crude oil, if you're long crude oil and crude oil goes below 43.60, closes below 43.60 in the weekly chart, then I'd say, you know what? Crude oil could pull back. I don't think it's going anywhere near the low of 29. Sorry, it was the low of 32.23. And but I do think that then it could go down to the 43s. Right now, I just think it's stuck in a bit of a range. That's it. So if you're looking at something like SCO, which is the ProShares Ultra Short Bloomberg Crude, this has gone to a leg B, but I would not be basing this is A, B. I'm going to call it leg C for now because I'm using that inside count. So that's C. So this is A and that's B. So what I'm looking at here is that, yeah, it's within a range. I don't think I would be wanting to short it yet. But for any reason, if it goes to at 87.87 down 6.85, if the SCO, the ProShares Ultra Short Bloomberg Crude, did spike towards the 96.80 to the 97.30s, remind me again, because that's where I probably would say, yeah, now you can add a short. We're looking at, and then a question about Cisco. Yeah, Cisco, CSCO. Trading at 29.62. This is a breakout. There's a new leg B. This is exactly the same as our daily charts are looking like. A, B, C, trough D at the bottom here. Nice move up. Now I'm going to talk about this because almost all the charts are in D or E's in the weeklies that we're looking at. And that's suggesting to me that we're getting closer to some kind of a pullback. So we're waiting for the D's now in the daily chart of the Dow and the S&P. And then we'll start talking about maybe looking at the short side. But I should have corrected myself. We have only long positions, but we do have one little insurance policy that was started this morning. Okay, so the Cisco is looking very good on the shorter term, intermediate term, and long term. But that doesn't mean to say that by the end of the week, I get some kind of a sell signal that it goes from the 30s, it'll probably touch the 30s, and it pulls back to the 28.5 to 27.5 area, but it's still looking very good. So the question is, what do I do? I would nibble on it right now. 29.61 would be my starter position, but that's all. The real position that you want looking out would be somewhere in the low 28s, and it's a 29.60. And I don't know the specific figure right now, but I would definitely say 28.30, I would start the next small position. Oracle, ORCL, right now is trading at up 46 cents at 41.24. Now, what's really interesting about this, in a sense, it is a weaker chart, but the daily technicals are actually quite nice. Now, this is the low here is 38.08, and this one here is a little bit, it's exactly the same. A, B, C, D, E, F. Maybe it's recycled. This is a new B, but what would I do with Oracle? I would rather be looking at Cisco than Oracle right now. So I'm going to skip Oracle as a buy. But if you ask me because you want it, then I would say, in this case, even though you might miss it, I would just have the patience. At 41.23, start nibbling at 40.21 to 39.70. In other words, I might miss the move on the upside, but the pattern that we were looking in Cisco, look at it. That's a much stronger pattern. So I'd rather go with a stronger pattern. It's a little bit cheaper, but that doesn't matter. Okay, the XLK, and then I need to go to some other stocks. The XLK is the, I knew this was going to be a tough one. Ever since it made that crazy spike to the bottom. I'm just going to say it's very positive right now, but it's getting real close to resistance. We broke out to a new all-time high at 44.73, the high of April. We went to 44.74, a penny higher. It's acting very nicely. I think it will go higher, but it's a pattern that is... This bar here, I'm just going to exclude it because it was such an aberration. If I look at that and I drag this down, then I'm looking at a trend line. What I wanted to say before is that the others don't have trend lines like this. This one has a very specific trend line, and that trend line, look at it. It's just so perfect. It hits every one of those peaks. And from that peak that was made in 2015, January, was it? No. It's a weekly chart. Sorry, that's a weekly chart. Back in March, the week of the 6th at 43.46, look at those rising highs, and then it pulls back from each one of them. And now I'm going to call that one a green. That's very positive if it closes above. And this is the Chapman wave up track. I'm now calling it the up track. It's just shorter. I like to try to be as concise as I can. Not always, but I try. And this says we're getting real close to the resistance zone. So XLK is looking very good. I'm just saying that risk reward, I'd probably have to say, I would have to wait at 44.70. Even if I miss it, my entry point, the only way I would do it is I would grab it right now, and it would be just a very small position. Doesn't matter how high it goes because it's only a small position, but you're really buying it here because you want to get in a little bit stronger towards the 43s rather than the 44.71 near 45. So 43.50-ish to 43.20 is where I would start. That's where I really start considering it. And USD JPY. All right, we got that out the way. USD JPY currencies now, very strong move. Leg B in the daily. This is going to be so interesting. Leg A in the weekly, and hit the trend line that we drew way, how many, I don't even know how many months ago we drew this trend line. I think we were up there near the 200-period moving average in the 110s, and now we're at 104.63, up 1.846 for a currency. That is huge, and it hit that trend line beautifully. Yes, now the USD JPY, the dollar Japanese yen currency, yesterday I said it's just the start of a move. It doesn't look too great in the weekly and the monthly. Now it's moving, and it's much more positive. I'll be back. Now the Dow's up 104 at 18,330. Oh man, exciting. We will do that. We'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. So you're looking at the 10-minute E-mini. It went right back to 21.45.25. Now it's going to try to attempt to break out, or it's not going to make it. Now, the big thing to look at is if you're looking at your moving averages right here, it deflected higher. If it goes under it, there's a problem. Now, this is where I would like to use shorter time frame to see what to do. And the other thing is, let me see if I've got it right here. Oh, I had these all prepared, and then I mixed them all up. Yeah, there it is. Okay, so here's the ESU. Without any notation, I wanted the MACD and the slow stochastic. And this is saying that the MACD is still very strong. Stochastic is not as strong as it should be, but it will be if the E-mini breaks to the upside. But this is also saying this is the right here at the double top area. Look at this, 25 cents is all you need to break above it, and all of a sudden you've got yourself into new territory, right? All-time high territory. We'll watch it. Okay. Gold. Gold is down 13 at 13.43. I'm almost sure that within 2 days I'm going to put a down arrow to say that's a peak E top in the daily. It is a G/B in the weekly, but you remember I spoke about the Chapman Wave inside track right there, and look at this. This inside track is going to be it could be a very strong resistance, and it's proving to be a very strong resistance. Those are the two parallel lines that take all those peaks, 1, 2, 3, 4, 5, 6, 7 peaks from the week of the 28th high of, well, it doesn't matter because it's a continuous contract, so the price is always changing. But that high, I'm looking at those peaks, and they hit exactly, and now you're underneath the inside track resistance repellent zone. Okay, and that's just saying that gold, hey, deserves a bit of a rest, that's all. And look at this, the TLT. The TLT gap, it's an island reversal from the 143.62 high that was made right there on the 8th of July. So a gap down, and it's under the 9-period moving average. The MACD is turned down sharply. I really can't put a down arrow because the stochastic's very strong at 92. So we might find that, it pulls back a little bit more, and then it tries to rally, and it takes time for the MACD and the slow stochastic to break down, or we're just having a timeout. But it is a peak E, making this week, if there's no new high above 143.62, but the MACD and stochastic are also very good. I think it's just a little bit of a timeout. And if you look at the TBT, which is the 200% long, so I guess right there, TLT. TBT is trading at 30.88, up 92 cents. Also an island reversal. And the weekly chart has gone to a trough G, and it's attempting to rally. Now, I'm going to do this. Normally, I would wait for a Friday to do it, but I'm going to do it right now. And I do have a lot of questions that I need to answer. I'll get to them. It is my contention that there is a chance, and it isn't completed, so this is just, I'm saying, a chance, that the weekly chart of the T-bond, 30-year T-bond yield, this is the white one, has gone in Elliott wave terms to 1, 2, 3, 4. In this area, we might be finding a 5. Everything matches really well for what I'm looking at, and based on the Chapman wave methodology as well. And if you're looking at it, it's at that trend line that I said, if I just draw this as a midpoint, not a midpoint, as a support level, where has it been before? All the yields have at some point been in this range, right? So for the Dow, it's been here before. It did make, let me squeeze this so that you can see it better, right there. So that low is the low in the yields, but the little bounce that it's just had today says that, yeah, we've been here before, and that was back in early 2015. But historically, this is the lowest yield that we've seen ever, at least in this contract, right? So this is very important. So a little bounce occurring right now. And as I said, I think yields are going to be up just for a little while, maybe 3 to 5 sessions. It could be longer. I'm just treating it as if we've seen this movie before, and I don't want to get trapped saying that this is the big one for the turn. I don't think it is. Look at the way the weekly chart of the home builders, the Philadelphia HGX is finally broken out. Huge leg D, and a nice bounce in wood, WOOD. This is the iShares Global Timber and Forestry ETF. Okay, now I can get to some of the other questions, and they're good questions, so I want to deal with them. Here we go. So now the question, actually, I should state this beforehand, is when I said that the only short we had was one particular position, it could be taken out very soon, but it was just more insurance than anything else if the Dow went above 18,351. But at the same time, we did buy a long position. So I'm not sure whether you think of this as a short or a long. I'm buying it as a long, but I suppose you can think of it as a short the TLT. So I just wanted to clarify that because I didn't want to misstate anything. So, in fact, we are short the TLT. Let's put it that way. Interesting. Now, let's go to what we wanted to look at was the question of the RIT. This is the transportation index. Very strong move to the upside. Hasn't broken the Chapman wave inside track resistance. And that will happen if at 140.63 up to 28. That's big. 1.65% for the trannies. That's big. But it really needs to get to the 143 would be great. But 145.50 to 146, it really breaks out from a lot of resistance levels. So that's what I'm looking for. And the support is at 137.50. And the XAL, the question was, I think, more related to what were AAL, American Airlines. Yeah, this is very good action in the XAL. And AA, American Airlines, no, AAL, what is AAL? AA is American Airlines. It's up 49 cents at 10.63. Wow, up 4.83%. It looks much better now. I thought it was going to retest the low. In fact, what it did is turned around and went very nicely. Now, I do want to look at the Nikkei. I had a question about that. Nikkei was up strongly yesterday and again today. So this is leg A and this is leg B. So that's a very strong move. We've seen this movie before. In the Nikkei, it goes to a B and then a B minus because it fails. But this one has the arch formation. That is the pattern we've been looking at. You remember we've seen this in the IBB. Remember the IBB? Oh, IBB, tap it on right there. IBB, which is trading up 1.92. We've seen that pattern before in the weekly chart, and we saw the pattern before in the weekly chart of Goldman Sachs. Nice day for Goldman, up 4.23, up 2.78% at 156. Goldman's acting very well. Yeah, I do think that XLF has a good chance to bounce a little further here. And all the indices are doing very well. Whoop, there goes the Dow, 18,345 up 118. That is definitely breaking out. That means that 10-minute chart right there spiked. Now, is this an E or a brand new A? I'm going to call it an E just for now. My thinking here is that, yeah, treating it as an E. That's my thinking. And I didn't talk about the SMHs. I did for my subscribers, but I'll do it again now. Here we go. The SMHs, very nice action on the SMHs. SMH is up 38 cents at 59.10. This is leg E in the weekly. Yeah, there's just so many leg Ds and Es in the weekly charts. The monthly charts are looking fabulous right now. The weekly charts are getting a little bit overbought. I'm going to be waiting another 3-4 days before I decide what to do. That's just AAL is American Airlines Group. What was A? Oh, AA was.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. How dumb. I mean, come on. I know Alcoa is very well because we've had it in our portfolio many times. AA trading at 10.66, up 52 cents, up 5%. Really nice move. This is a good sign. I mean, this is a good sign. And all I'm going to say to you is that I really think it isn't just politics. I do think that the economy has improved a lot. I mean, that's what the market is saying. That's all. Okay. And now, so we've got, and if you look at the SLX, which is the steel ETF, beautiful move, gone from the 25 level to 30.74 in the space of a week and a half. This is Ray Van Eck steel ETF. What do you got there? You got X trading at 21. Fortunately, we're in below 18. So this is a nice move up. And I liked it because it just held so well. Look, it was making higher highs and higher lows. And leg B now this is the first time we're looking at monthly charts that have improved enough to really get to a B, a strong leg B. Month is not finished, but even getting there is very important. So I do think this is something. Why didn't I call it leg E? Because you hadn't got there yet. But to be conservative, I always say, okay, everything looks like it should be a B, but it didn't break the low that started the move at 6.80. So when it broke above the 20.38 or whatever it was level, I think it was 50 actually, 20.55 level, the April high of peak D, I have to immediately say, because it's just done it now for the first time, this is an E/B. My bias is to say that it's a B, but I just want to be formal and say, yeah, E. And E matches all the other weekly charts that we're looking at. So I'm just going to keep it here as E/B. My target had been left side, right side price time match to the 2055 area. It got there in a much quicker time frame. So that's a good sign. It's a very good sign. Okay, so let's keep moving along. And we've got to look at then within the context of this particular market, if you look at time frames, let me just show you something here. If you look at time frames, let's go to, I don't know if I've actually updated this Dow chart here. No, okay. So this is DEF slash, so there's a potential D, E, F slash B. Why? Because that could have recycled to a Chapman wave instant restart. There's E/A, F/B. And the MACD is so strong. Look at it rising right there. And look at the stochastic at 93%. So that suggests, and if you want to draw trend lines, you could say, well, there's this particular pattern here, which often leads to some kind of a digestive moment. So we're getting close to some kind of a pullback here. Just brief pullback. But what's so nice about the Dow is that within the context of what we're looking at, the strength that we've seen has been the daily. First of all, the weekly started to break out. Gave a Chapman wave squash over there, which take you to a C, and then you have to pull back, and then very often it takes time before you can get to the D, because the MACD then has to take you higher with the momentum. But look at this powerful move from 17,063 to where we are right now, 18,346. By any calculation, we're talking about a 1,300 point move to the upside, right? 1,200 to 1,300. That is huge. And we haven't yet had a rest of more than 2 days. Remember my rule of 136? So as I'm looking at this, I'm saying daily is in B, and it should go, everything here says it should go to a C and then a D. The fact that we've got a second day of the week going to a higher high means that that's probably going to occur in one of the peaks going to either a C or a D. So we're looking at no earlier than Friday as a potential leg D. Probably it's going to be early next week. But the weekly chart is broken out, yet it's in D. So D says you've got to be a little bit careful, a little more cautious. At the same time, look at the way that it's done it. It's done it with a little hook on the left, big W formation, little hook on the right, and powerful move up. Now it's an all-time territory where there is no resistance. Remember, that's the thing about all-time highs. When you look at stocks like, let's go, Amazon, when they go to all-time highs, they do have a tendency to keep wanting to go to all-time highs. So Amazon's in leg E. Google, I will not say Alphabet, I just said Alphabet, is coming back a little bit. Not bad. This is that Sears and Roebuck pattern that I learned years ago. Could become very bullish because the H becomes an inverted cup right here. Look, that becomes this. The move up. Didn't draw it right. Anyway, but that becomes a cup. So that has the potential. Now, as I'm looking at it, I'm saying, okay, what about your Facebooks and stuff like that? Well, Facebook's acting well. It's up 22 cents, up 18 cents, but not great. What's the other one? FANG, and Netflix, NFLX. Netflix, not good at all. And that's the reason why the Qs are doing okay, but they're not at all-time highs. That's the reason why the NYA.X has too many laggards. So it's going to be very important how it goes. Oh, we've got Carlos in Garden Grove, California. Carlos, how are you?
Very well, Basil.
Yes.
How are you?
Good. I'm well, thank you.
Basil, I have a question related to the British pound, and I need some help from you. I need an exit area. I'm in at 128.97.
So you're in at 128.97 and it's at 1.325 right now, correct?
Yes.
Okay. So now, is this a position or a trade, or you don't really care, you just want to make some money?
Well, I really want to use it as a trade, not really a long-term position. I don't want to change my mind when initially it was a trade.
Okay. So initially it was a trade, but because of the power of the move off the low, although if you look at it on the other side, the power of the move to the downside was not very good. Folks, we're looking at the British pound. I'm looking at the continuous contract. It's in leg A, B, C, leg D in the 120-minute chart. This is what I'm going to suggest to you. I don't know if you've got enough to be able to split it into two. You're in at 1.28. The chances over the past months, many months, of getting a nice entry off a low and seeing a good profit rather than a loss, I don't have to tell you, it's been minimal, because this has just been in a major downtrend. Yes. So the entry you got at 1.28 and the low was 1.2806 means that you are in almost perfectly. I don't know how you could get a better entrance than that. Now the problem is
Mr. help me with that.
Oh, well, that's fantastic. I know Larry's had some wonderful calls. That's great. So now what we're looking at is a situation where that entrance, if you get out of the entrance, as we've done just recently, got out and then couldn't get back into something that really just took off, and I didn't mean to get out. It was an accident that I got out. I actually mistyped. We still made money, but I really didn't want to get out. Means that it's really hard to get back in. So I'm going to suggest to you, because there's a break coming up, can you hold through the break, because then I can
Sure.
give you exact
Yes.
numbers. I'm going
I'll
to
be here.
suggest
Thank you.
splitting it up, keeping a core, and having a trading position. We'll be back with Carlos. Dow's up 122 at all-time highs. I'll be back. Basil Chapman, Tiger Technicians Hour.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. We're on with Carlos from California, and we're looking at the Great British Pound, and it's trading very well. It's at 1.324. Carlos, think about your own plan, but this is my suggestion. Because you got in so well, I'm going to suggest that no matter what, you're going to take a profit, but you're going to split it into two halves. The first half is going to say, I'm in at 128. I'm going to make like 1.295 or something, a stop. But give yourself the pleasure of at least making a stop that you make money. The other half, I'm going to say to you, hold it for now. 1.31 is the 9-period exponential moving average support. I suspect if there's a powerful move like this today, there could be a follow-through tomorrow. So the second one, I would have a stop of about 1.30 because I want to give it a little bit of room. or you take it off right now at 1.32 and you try to get back in. I think that's going to be tough to do. You got in fabulously. I'd rather work your position into two halves. One is a core position and one is a trading position. But even, this is unusual for me to say, even the trading position, I would give it some room. That's all I'm saying to you. So think about it. Maybe you don't want to do that. You could have 3/3. The first third is your core at 128 and you're going to make some kind of a profit there. The other one has a stop of 1.295. And the other one is, you say to yourself, if this goes to 1.33, I'm making my stop real tight. And if that gets taken out, big deal. That's 1/3. I've rewarded myself for the position. I've still got 2/3 left. So that's really the way. But I just want. Yes.
Yes. Can I ask you? The situation is this: I have 4 contracts on the futures. But I got a position on the Forex market too, with 3 lots of, it's like, no, actually 4. It's one is 30 and one is 10,000 in a different account. And would you do the same thing, selling half and keeping half? Because they're all in profit right now.
Because you've got that amount. That's a large amount. I'm going to make the suggestion that you do the 3/3.
Okay.
Or actually, you know what? With one position, make it 3/3, and with one position, make it 2 halves of what you've got.
Okay. That sounds very good.
So yeah, I think that makes sense. That makes sense to me. The most important thing is you got in fabulously. I think this is a move that can make you quite a lot of money. I don't want you to get out early, that's all. And I'm willing to say I would risk a core position of making just a small amount of money so that I can not be greedy. I want to trade this. I'm position myself for it rather than trade it. And then one little part of it will be the trading part of it. Does that make sense?
It really does, Basil. Thank you very much.
Good.
Really
Thanks so much for calling, Carlos. Good luck. Let me know how it went.
Thank you.
Thank you. So, folks, just as we're about to go, you're about to go to your swimming lesson. Remember, this is Tuesday, so you got a full house all the way here at TFNN, all the way to Andy Hecht, going all the way to 5 o'clock till 6 is when Andy comes in. Stay tuned because everyone here really has something special to say. You've got your A, your capital A, uppercase A in the VIX index. It's retesting that low of 1272. It didn't quite make it today, even though the Dow went to a new high in the S&P, 1275. Watch that closely. If you take out 1275, 1272 on the VIX index, this market goes even higher. But there's a lot, there are so many people that are not in the way they would like to be in this market. I think there's tremendous support, at least this week, and a lot of people are going to be chasing and chasing and chasing. So keep your eye, VIX at the 13.51 level. That says buying pressure still. VIX goes to 13.85, certainly to 14. This market pulls back, and we have a little bit of a rest for a day or two before we go higher. Hey, stay tuned. I'll be back with Tom O'Brien this afternoon. Have a wonderful day. Otherwise, I'll see you tomorrow morning. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,